And I would like to now open up the floor to Q&A. If you have any questions regarding this discourse or anything related to Islamic finance, banking and economics.
So we have a question here from a brother. How does Islamic finance or Islamic bank make money?
So that's a very good question. Allah subhanahu wa ta'ala states in the Quran, وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. The fundamental and underlying concept of Islamic banking is based on trade. Allah says in the Quran that indeed Allah has permitted legal and lawful trade, وَحَرَّمَ الرِّبَى, and Allah has prohibited usury and usurious transactions. So Islamic banking per se is based on an underlying trade of an actual asset or service. So if we look at the concept of murabaha, murabaha refers to where the bank is actually purchasing an asset and selling it to you as the client with a profit rate. It is not simply a loan that is provided. So Islamic banking is not meant to be a charitable exercise. It is also meant to be a profitable exercise that delivers and creates value. Any further questions?
Thank you, Chef. Actually, you have been marked as a good knowledge. My question is, I have about 4 questions. But the first question is, from your talks, you have said that the Islamic finance market grew about 10% during the COVID period. So maybe for our knowledge, you will advise us what are some of the techniques that they have used to overcome the challenge. Then question number 2, quite often we have a bit of challenge in explaining where we normally say loss is shared. Profit, they have no problem because nobody will come to you for a share for profit. But when it comes to loss that has occurred, genuinely, from the client perspective, you don't get the real answer why the loss has incurred. And at the time you are getting it, it's too late for you to make some kind of a shared concept. So maybe I would like to know what are some of the techniques that is used to determine whether loss was actually occurred, and the customer wants to be shared. Thirdly, it's about insurance. So quite often we have an issue of insurance. Most customers will tell you, I base my insurance on Allah, and my fate is determined by Allah. So why do I want to transfer that risk to someone else? So how do we want to overcome that? I mean, what are some of the techniques that we will use to make sure that we overcome those 3 challenges? Maybe there are more, but I will allow you to answer that. Thank you.
So the first question is in terms of the resilience of the Islamic, finance and economic sector. So I have responded to this in a detailed article in which I have documented the response of Islamic financial institutions, central banks that govern Islamic financial institutions in terms of the response to the COVID-19 pandemic. But in brief, I would like to mention 5 important points that facilitated the general resilience and growth of Islamic financial institutions despite the COVID-19 pandemic. The first was in the sense, Allah subhanahu wa ta'ala states in the Quran that if there is a debtor and it is proving difficult for that debtor to pay, then give them a period of time. Show leniency. The hadith of Rasulullah sallallahu alaihi wasallam states that Rahimallahu mra'an samhan idha ashtara, samhan idha ba'a wa idha iqtada. This is an authentic sahih narration in which Rasulullah sallallahu alaihi wasallam states, may Allah be merciful upon that person who is flexible, who is lenient when he purchases, when he sells, and وَإِذَا اقْتَضَى, when he demands his haqq, when he demands his right. So, based on this philosophy of being lenient, of being flexible, central banks provided guidelines to Islamic financial institutions to provide packages, COVID-19 packages to their clients in terms of being lenient and flexible when it comes to their debt obligations. And there were various stimulus packages that were instituted also at a central banking level. And in general, Islamic financial institutions, because they could not restructure the existing Islamic financial contracts, they were more lenient and more flexible in terms of the COVID-19 pandemic. The second issue where we saw the resilience of Islamic finance was given the general level of prudent lending and banking practice due to the oversight of central banks and Sharia governance committees. So by ensuring that Islamic banks from a lending perspective had followed the Sharia principles due to the Sharia banking laws, due to the laws of Islamic finance, business and economics. In other words, it was asset-backed financing that also provided greater stability to the Islamic financial industry. The third point I would like to mention is that in terms of the industry, we had a lot more, consciousness around being Sharia compliant. And I'll give you an example. At FMB Islamic Banking in South Africa, we had only 2 defaults over a period of 7 years. And the book had eventually reached over 200 million United States dollars, but we only had 2 defaults. And the question was posed to us that you have such a large book, but why is it that you only have 2 defaults? So the response was, people who engage in a Sharia compliant transaction, they approach Islamic finance with a particular mindset and consciousness. That you know that you have an obligation. Firstly, you have Islamic business ethics. Secondly, what is halal is halal. What is haram is haram. So if you have taken out a loan, we know in Sharia, even if you default, if you liquidate your company, if you sequestrate yourself, you still have an obligation to pay your creditor back, whether you like it or you don't. So there is a process of iflas in Sharia, but in the end, you are still obligated to pay back your loan. So I believe that because of this mindset, the Sharia compliance mindset, that there were lesser defaults in the system. Fourthly, is in the sense that Islamic banks in general adopt a more cautious approach in terms of financial solutions and transactions. So Islamic banks and financial institutions don't engage in derivatives, they don't engage in swaps in general. So you have much more puritanical, vanilla type of structures that are offered in the market, like vehicle finance, home finance. So as I mentioned, it is generally asset-backed lending that is more cautious. And lastly, in the sense that most Islamic financial institutions have adopted the King Code of Governance, and they have also adopted Basel III in terms of their reporting to central banks. So beside being compliant with Basel III, they're also compliant with Sharia law. So there's an additional overlay from a Sharia governance perspective. So these are few points that I believe contributed to the general resilience of the Islamic economic system, where we did not see a shortfall and a decline in Islamic banking, but we actually saw a growth of 10%. So despite the COVID-19 pandemic, we actually saw a growth in the Islamic finance industry. Because if you think about it, the world is currently facing a huge challenge in terms of inflation. What is inflation? Inflation means that according to the consumer price index, according to consumer pricing, the price of goods and services have increased. And Islamic banking and finance is based on trading. In other words, that a bank would finance the purchase of actual commodities of assets. The price of assets, commodities, services have gone up. So therefore it only makes sense for Islamic finance as an industry to also grow in line with the increase of services and assets also. The second question that you posed regarding insurance. So the concept of insurance from a conventional construct may be impermissible, but Islam is not averse to assurance. So I once conducted an interview on BBC Radio in which the presenter questioned me and said, why does Islam prohibit insurance? So I responded to the presenter and said, Islam is averse to insurance, but we are not averse to assurance. What is assurance? Assurance means that you take all the requisite protection in terms of ensuring that you maintain the stability of your financial position. And this appears based on the hadith and prophetic tradition of Rasulullah sallallahu alaihi wasallam that tie your camel. If there was no such a thing of assurance and protection of your capital, why did the Prophet command this companion and Sahabi to tie his camel? He could have simply said, make dua, put your tawakkul and your trust in Allah, and then leave the camel, let the camel roam wherever it wants, and maybe when the next time you make dua, you'll find the camel somewhere. We also find the concept of assurance and mutual indemnification in the concept of aqilah. There is a fiqhi concept, a concept of jurisprudence called aqilah or joint blood money. What this means, based under the Medina Charter, that the companions of Rasulullah sallallahu alaihi wasallam who belonged to a certain tribes, if there was a murder that took place, there was qatl, whether it was amad or khata, right, whether it was intentional or unintentional, then the entire tribe would have a pact to pay the blood money that was due to the other tribe. So is this not a form of mutual indemnification? And we also find this form of mutual indemnification in our Sharia. We have the concept of mu'akhat, of brotherhood, where the Prophet paid one Sahabi, one companion to the next companion. Likewise, there are countless other examples of the concept of assurance. So it does not go against the concept of assurance for one to adopt a takaful policy to indemnify themselves. We live in a world which there are so many risks and challenges. So if you are not going to assure ourselves against the risks and tie our camels proverbially, then it will be very difficult to conduct business. And you know, what is business? Business basically comes down to one thing: how you manage your risk. If you don't manage risk, if you don't understand the concept of risk management, you'll probably end up making a loss rather than making a profit in business. So I hope I've answered your questions. The last question was with regards to what is referred to in Islamic banking as PLS, or profit and loss sharing. So this concept is based on the prophetic tradition or narration of the Prophet sallallahu alaihi wasallam, in which he has mentioned al-ghunmu bil-ghurmi or al-ghurmu bil-ghunmi. In other words, that you can only make a profit if you take risk. If you don't take risk, then you can't make a profit. So these are the ideal mechanisms of Islamic finance in terms of creating a just and equitable economic society based on an economic equilibrium that is justified and equitable. So what I mean by this is the concept of musharaka, the concept of mudaraba. These are Islamic partnerships which are based on the profit and loss sharing methodology. Unfortunately, most Islamic financial institutions have failed to adopt the PLS system on the basis that these systems seem to, and there is a perception that these systems create more risks in the banking system. But it is not simply that. It is also the issue of being compliant with Basel III under the laws or the banking acts that are that are provided by the central banks and the financial regulators. So by holding assets and equity on the balance sheet, this creates financial and monetary pressures on financial institutions. So you know that there is a requirement from the central bank that if you are a financial institution, you have to deposit a certain percentage of your liquidity or your equity with the central bank. This is termed as KEGA, your KEGA requirement. So if your equity increases on the balance sheet, then your KEGA requirements increase, making the bank nearly and almost non-profitable. So in the end, if you're sitting with more equity, then there are certain higher risk management and governance principles that are required for financial institutions would sit with higher equity on the balance sheet. So, for example, in South Africa, if you hold an equity position in a particular transaction, then your risk profile is increased to the extent that your leverage and your debt position on the balance sheet as a financial institution is regulated. you can only lend up to 40 to 60% based on an equity position that you take in a transaction. But if you take a debt-based position, then your leverage increases. So it is not only simply about the Islamic financial institutions not wanting to adopt Mudaraba and Musharaka. It also goes beyond that in terms of compliance with Basel III, in terms of compliance with the Central Banking Act, and also in terms of the general risk profiling and management of financial institutions. But nevertheless, in saying that, we need to adopt more PLS, profit and loss sharing, contracts and agreements. And perhaps one of the greatest ways to do that is in terms of what I refer to as alternative financial services providers. I mean, you look at crowdfunding. Crowdfunding is not governed by the central bank. It is not governed by Basel III. So why can't we have Musharaka and Mudaraba in crowdfunding? So if we really want to be more aligned to the ideal Islamic economic system, then we should look at much more equitable modes of financing with profit and loss sharing concepts like Musharaka, Mudaraba. But the last point I would like to mention regarding this PLS is that we live in a time of fraud, misrepresentation, and it becomes difficult for financial institutions to take a position based purely on equity. How does the financial institution ensure that it can trust the client to adequately report on the actual numbers? Now, financial statements could dictate a particular figure, whereas the reality could be far different to that. So I think when it comes to the PLS system, the greatest hope for us as an Islamic finance industry is in terms of the alternative financial services industry, in terms of decentralized finance, in terms of embedded finance, where financial service providers, fintech companies outside the scope of central banks and the Bank Acts and Basel III would be able to adopt these profit and loss sharing concepts. Any further questions?
Thank you very much, Mufti Ibrahim. My question, I just wanted to hear a little bit on the matter of mortgages in the concept of Islamic finance.
So mortgage or conventional mortgage is also what is referred to as an HP. The concept of a mortgage is impermissible because it refers to conventional lending. The alternative to that is what is referred to as diminishing musharaka, or DM in short form, essentially which refers to where the customer and the bank jointly partner to purchase a home. So for example, if you intend to purchase a home here in Nairobi, you have $100,000 deposit and the total funding required is $400,000. So the bank will provide the $300,000 and it will become a sharik, a partner with you. But the bank is not in the business of holding property. The bank will sell its units in proportionate ownership, let's say 80% to you over a fixed period of time. Let's say 12 years, 15 years, for example. The bank can also charge rent pro rata based on its share of ownership. So let's say, for example, the bank now owns 80% of your asset. Right? Of the jointly owned asset, it could charge a rent of, let's say, $8,000. But as the bank's ownership decreases, then the rent can also decrease pro rata. So this is what is referred to as the diminishing musharaka concept, which is the alternative to a mortgage.
For a while now, we've been wondering whether investing in Bitcoin and cryptocurrency and stuff is halal or not. You've just mentioned that it is. How can we invest in Bitcoin, in Sharia compliant Bitcoins?
So as I mentioned, that the actual Bitcoin itself is permitted. In terms of the brokerage and custodian of Bitcoin, in terms of how one accesses Bitcoin, one would have to ensure that the underlying terms and conditions of the platform that facilitates the purchase and sale of Bitcoin that is Sharia compliant. But generally, you have many of these crypto exchanges like Coinbase, KuCoin, Exodus, different crypto wallets where you can purchase and sell cryptocurrency. So that is perfectly permitted because it is simply a service that they provide, and you pay a brokerage fee as a service payment to facilitate the cryptocurrency or Bitcoin transaction.
Shukran, Mufti. I just want to find out, earlier on you mentioned as part of the greatest challenges awareness and education. And you gave us the example of Algeria, where you said the general acceptance or the general knowledge as far as Islamic finance is a slightly lower percentage in a country which is almost 100% Islamic. I just thought about that much more and wanted to find out if that is the case in a country like Algeria, what would be some of the things we need to look out for in Kenya to ensure that we don't get into this similar situation? Thank you.
So I think this is a very, very important question. And if you look at other markets for Islamic finance, let's look at South Africa, for example. Out of a population of 2.5 million Muslims, it is believed that only 40% bank with Islamic finance. So what happens with the other 60%? So I think it is a matter in terms of what is termed as an information asymmetry. So there is a risk in terms of information asymmetry where you have Muslims that are not aware of the solutions that are provided in the system. So much more awareness needs to be created in terms of Sharia compliant products and what backs Sharia compliant products. To simply go out there and say a product is compliant, that is not sufficient. And this is what we have been advocating, that people need to be aware of why they are purchasing a particular product. If you're purchasing a Murabaha product, it's not simply called Islamic lending. Why is it Sharia compliant? What backs that transaction? So I think, as I've mentioned, we have to go beyond simply understanding concepts now to understanding the principles that back those concepts so that the general masses are much more aware around being compliant. But that is not to say also that it's also an issue of where, you have the religious and you have the non-religious. So adoption will fluctuate also to a certain extent based on the religious nature of the Muslim population. So I think there are several factors, but as I've said, that I think the first one is in terms of education, awareness. Second is in terms of service. So unfortunately, service in many jurisdictions for Islamic finance has proven to be worse than conventional peers. So much more needs to be done in terms of servicing Muslim clients at a better level. And I would say thirdly is in terms of the competitiveness of Islamic financial products, where Islamic financial products need to be more competitive than conventional peers. So if you take an example of a typical client that has been banking with a conventional institution, what reason would they need other than Sharia compliance to move from a conventional product which they have used for 20 years, 30 years, for example, to move to an Islamic financial institution? And lastly, I would say is in terms of the standardization and regularization of Islamic finance in a jurisdiction. So in order to create more credibility in the system, you have to have laws, you have to have legal codification that backs an Islamic financial system. So for example, here in Kenya, I believe that there is a bill that was passed for Islamic finance. But has the tax law been amended for Islamic finance? Do we have case studies, legal codifications of Islamic finance that creates further credibility in the system? So unfortunately, the Islamic finance industry has focused only on banking per se, but as a substract of that, we need to look at the other elements of what I call the flywheel of Islamic finance. So you have the legal system, you have the tax system, you have the standardization, you have the audit system. All of these different elements play a role in creating further credibility and enhancing the growth of Islamic finance. So I would say at the top of the list would be obviously education and awareness, but beyond that, there are other factors that need to be considered.
For this enlightening talk. My question is about investments. So you told us about the various types of investments that are compliant. And my specific question is, are Sharia products confined to only Sharia compliant projects, for instance. So assume I want to build a shopping mall. Is it blocked out to Muslims who want a Sharia compliant product if the entire project is, say, 90% or 50% backed by a conventional financial products and the other 50% is open? I mean, you get my question, right?
So, I mean, there are three types of Islamic financial institutions. You have a wholly owned Islamic bank or Islamic financial institution. So, in other words, the operations from top down are all Sharia compliant. The second type is what is called an Islamic window. So, an Islamic window means it refers to a ring-fenced, system of operations within a conventional financial institution. So, for example, you have Citibank. For example, Citibank would have an Islamic window where the assets will be ring-fenced in a separate account, etc. So, as long as a proper ring fencing takes place where there is no khulta. Khulta refers to there is no commingling of funds. As long as there is no commingling of funds and there is proper ring fencing of assets, then you can have an Islamic window of operations within a conventional institution. And the third one is in terms of having an Islamic division. So an Islamic division could be as a sub-entity of a parent entity. So you'd have a parent entity that will be conventional, and the parent entity could own a subsidiary vehicle as a separate entity, as a separate financial construct that will be Sharia compliant. You have a further question?
In that sense, then can I create as well a company, let's say a fintech, that has an Islamic window, or that has an Islamic division that has products that cater for this side of the business, and another one that caters for that? Is that acceptable?
So if you have an Islamic fintech that has different solutions, as long as it's ring fenced, then the profit for investors should only be attributed to the Islamic operations, and the conventional operations would be totally separate. So I guess what I'm saying is that the same rulings that are applicable to banking would also be applicable to fintech also, in general.
One query. Is Islamic finance only for Muslims?
So this is a very, very good question which I've received, in many countries. I once went to Malta and I presented before Mr. Joseph Muscat, the Prime Minister of Malta. So he made a very startling comment. He said, up till today, I didn't know that Islamic finance wasn't only for Muslims, and that we, as a European state, being the heart of Christianity, we could also be proponents of Islamic finance. And I responded to him and I said, the Islamic economic system is for everyone. In actual fact, Islam is a system and a way of life for the entire humanity. So, for Muslims, we should see it as a form of dawah, form of inviting others to Islam, to show them the purity and the goodness, the wholesomeness of the Islamic economic system that is backed by actual assets and that creates value and opposes oppression in any form. So Islamic finance is for Muslims and non-Muslims. Any further questions? I would then like to terminate my session by firstly thanking the strategic partners, Abojani, Kenya Institute of Bankers, FinSense, and all the silent soldiers that played a role in organizing this event. May Allah, may God bless you and grant you the best. I would then like to secondly thank each one of you as the participants of this program. It is your will, your drive to learn about Islamic finance, banking and economics that has persuaded and encouraged you to attend this program. And lastly, I would like to advise that this is not the first and last program that we will be conducting. There will be a lot more programs, events, seminars, awareness and education sessions that we intend to conduct in Kenya and in the Eastern and Central African regions. And we would like to request your continuous support for this, and we look forward to our further engagement, inshallah. So with that, I say, fi amanillah, wassalamu alaikum wa rahmatullahi wa barakatuh. Thank you, and may God bless. I would like to now hand over to Brother Imran to say the final comments.
Jazakallah. Thank you, Brother Mufti. Again, I would like to reiterate a lot of appreciation to Abojani, to Kenya Institute of Bankers for their support for this. I would like to also call Robert on stage to give us final remarks. Robert, please.
Good evening once again, and thank you very much. So I know most of you are from financial services industry, and you tend to be very busy, especially towards the end of the month. So when I was in banking, it used to be called EOM, and it was one of the most stressful times of the month. But you took your time and came through the short notice. So that is what drives us. Because to be honest, we are in a very difficult space. You feel like what you have is useful to people, but we rarely get the traction. So when you come, that is what keeps us going. And thank you very much. And we hope that you'll be the ambassadors of these conversations so that we can continue moving forward. I'm a big believer in conversations in Africa because that is what is going to provide solutions to us. So I find sometimes I'm in some forums, maybe SMEs or entrepreneurs, and they spend almost 24 hours complaining how banks are not lending to them or how they're not getting funding from the West. But the question is usually, why are they not doing sales and marketing so that they can connect with their customers? Because in Africa, with conversations, I believe that you cannot sleep hungry. That is usually the belief. So let's continue the conversations and build ourselves so that we'll be so busy building and we won't even have time to complain about the challenges that you're having. So thank you for all the bankers, people from financial services industry. You have some business advisors who have actually been approached and requested to provide some kind of advisory. So when they came here, they were so excited to see Mufti and the fact that there'll be follow-up programs to help empower you so that you can provide value to your customers. So thank you and wish you a safe journey back home. And wish you also a happy month. Thank you.
Thank you. Thank you, everyone. And the event is now closed. We still have a lot of snacks behind. So I know for some of us who would not get food at home, wives will say the kitchen is closed. So please make the most of this. Thank you very much. Jazakallah.